Alrighty, who burnt the flapjacks? Ladies and gentlemen, public countdown, a whopping $160,000 here today. That's a big number, down 4.2%. And who do we have to thank for that? Well, it's Mr. AMD. I posted this on X just a bit ago, 47 minutes ago. Looks like 23,000 people have gotten to see that. If you want to follow me on X, I always have that linked in the description area down there. Yeah, 6 figures down on AMD just in the public count here today. If you add up all my shares across all the portfolios, it was a multi-6-figure down day for AMD. That stock obviously got crushed. We have Michael Burry out there saying things like the U.S. financial markets and the economy are going to crash. The problem is too big to save. We have stocks just getting obliterated. Figma's down 83% from highs. HubSpot down 71%. Monday down 70%. ServiceNow's down 53%. Salesforce is down 47%. AppLovin's down 47%. Zscaler's down 46%. Workday's down 45%. Datadog down 42%. Snowflake, I don't know why they really call it a SaaS play. I wouldn't really call it a SaaS play, but Snowflake's down 40%. Shopify getting Shopify, 37% down for that stock. I mean, you look at the hood, Robinhood, for instance, right? We used to say the hood's in the hood. I mean, the hood might be going back to the hood, okay? Look at this baby. It's now down 47% from highs. Coinbase is looking for coins in the parking lot. This stock is now down almost 60% from the highs it hit back in 2025. Almost 60%. These moves are pretty darn shocking, right? Look at Bitcoin. Bitcoin's down 42% from highs. And the craziest part of this is the S&P 500 is only down like 2% from highs. 2%. So I just ran you through devastation. What do you think some of these assets would be at if the S&P 500 itself, if the NASDAQ itself was actually getting hit hard, right? Like that makes you kind of think, right? Look at this. Ethereum is now down 56% from the highs it hit last year in 2025. Unbelievable. Off a 2% S&P 500 move down. Incredible, right? So we have two scenarios that could be happening now. It's a small pullback, right, in regards to the market, and these riskier stocks or seen as riskier stocks could just be getting hit, and assets in general like Bitcoin, Ethereum, right? And it's just a small pullback in the market. Or this could be risk off assets like Bitcoin, Ethereum, the riskier stocks, right, setting up for what's coming, which is a major market correction or crash, which sometimes you see that scenario happen, right? We got to talk about that in today's video. 5 core subjects in this one here today, ladies and gentlemen, okay? One is the market setting up for a correction or crash, okay? We're going to talk about that because it's an important subject given all these risk assets selling off so heavily the last several months, right? Number 2, AMD. That stock obviously got just obliterated today. My thoughts on the crash, what's my plans with that stock now at this point in time, okay? Third subject up here, Google earnings. What's my plan with my Google shares given those earnings? Number 4, ELF on a shelf. ELF reported earnings. What are my plans with ELF stock now at this point in time? What do I see happening there? And the 5th subject up here, I'm going to share my full possible buys watch list in this video here today. Talk about a banger of a video. One thing only I need from you guys. I'm tired, man. I'm tired. If you could just please hit that thumbs up button. That's all I need from you, okay? Just one little smash of the like button goes a long way for your man Jeremy, okay? I recorded you guys a 58-minute video today that Loom screwed up and I could not download it. 58 minutes. I was going to post it on the reaction channel at like 11 a.m. or around noon today, and Loom like wouldn't download it. So it's been a long day. Hopefully at some point in time, like Loom can figure that out on the back end and give that video so I can post it for you guys. I was talking about so many stocks in the market in that one. This video, I'm going to be honest with you, is better than that video was. But the moral of the story is it's frustrating to record a 58-minute video. And, you know, obviously I know a lot of you guys wanted to see that, but can't see it. If you want to have notifications on, put notifications on. There's so much going on in the markets right now. I'm trying to keep you guys up to date with everything going on. Not only notifications for this channel, but for that reaction channel as well, because you never know if I'm going to post something on the reaction channel or here. A lot of it comes down to if there's videos I want to react to, right? Pin comment down there today. If you're looking to apply to our private stock group, private wealth group, get access to all of my course curriculums, Become a Master Stock Market, Millionaire Playbook, Stock Options Mastery, Dividend Investing Mastery, private Discord chat, all that good stuff. You know, applications are always the most insane when the market's banging, when people are hitting all-time highs. Applications always fall when the market's going through trouble, right? That's the best time to join, is when the market's actually in trouble. That's the most intelligent time, right? In the Discord chat, whoo, that could be a lifesaver, right? Makes you feel like you're not in this game all alone, right? And the Discord chat's always craziest during earnings season and when the market's crazy, right? Surround yourself with 6, 7, and 8-figure investors that have been doing this a long time. That will be the pinned comment down there to apply to join us in the private stock group, okay? Alrighty, so is the market setting up for a correction or crash? Here we go. So, if you want to understand how risk on assets can set you up for a correction or crash, look at past time periods, okay? So for instance, 2 of the bigger crashes we've had in the last, let's call it 30 years, right? Last 3 decades, or we could just say since my lifetime. I've been alive for 36 years now, right? The 2 biggest crashes that always come to mind in my lifetime of 36 years is the tech bubble crash and the great financial crisis crash, right? We've had other crashes throughout that time. We had the 2020 crash, we had the 2022 crash, and NASDAQ fell 37% peak to trough, right? And we've had other corrections, crashes along the way. But the 2 big dogs are the tech bubble crash and the great financial crisis, right? And in both those scenarios, you notice something very interesting. So for instance, in the tech bubble, prior to that popping, Amazon was a huge risk on stock, obviously, back in those days, right? And if you look, that stock actually hit all-time highs in March of 1999, okay? Remember this, March 1999. Now, the S&P 500, if we pull up SPY here, the S&P 500 actually hit all-time highs in the summer of 2000, okay? It's very important because you got to understand an asset like Amazon was already showing weakness way before the market itself actually started to fall, okay? Keep that in mind. If we look at eBay was a huge risk on stock back in the tech bubble days, right? eBay was a high flyer. That baby hit all-time highs in April of 1999, okay? Once again, way before. We're talking, some of these stocks like Amazon, eBay were hitting their all-time highs in their peaks. They were peaking well over a year before the actual market peaked, okay? Microsoft, Mr. Softy, that one peaked December 1999, a full, we can call it 6 to 7 months before the market itself peaked. If you look at Cisco, this one was interesting. It peaked slightly before the market itself. This one was a March of 2000 peak here, okay? So the moral of the story is here, these risk-on type stocks, they can peak months or even year plus before the market itself peak. It's actually a pretty, telltale sign that, you might actually have trouble coming in the overall market. It's just those risk-on stocks give you a little tell before that. Now, if we think about the great financial crisis, right? The great financial crisis, a lot of the risk-on type stocks at that particular time were not really tech stocks. They were like home builders, banks, those sorts of things. Like that was the hype in those particular days prior to the great financial crisis, right? So if you look at a stock like Toll Brothers went through this parabolic rise, right? And the interesting thing is that stock peaked in the summer of 2005. Now that's fascinating because that's a full 2 years before the S&P 500 peaked. Because the S&P 500, that peaked in, that actually peaked around fall 2007. 2007, ladies and gentlemen, okay? Fascinating. KB Home, same exact situation. That one peaked in July 2005. Pulte Home, that one peaked in July 2005, same as KB, same as Toll Brothers, right? Look at somebody like a banking play, like JP Morgan. The banks were hot back then. The financial institutions, there was so much financial engineering going on and all types of craziness, right? If you look at JP Morgan, that one peaked in the spring of 2007. And remember, the market itself peaked, as far as the SPY goes, the SPY peaked around fall of 2007, right? So JP Morgan peaked way before that. Look at Bank of America. Bank of America peaked in October 2006. Woo! Goldman Sachs. This is a really interesting one regarding Goldman Sachs. It actually peaked with the S&P 500. That's a fascinating one, right? Citigroup, this one peaked December of 2006. And by the way, look at how bad this fall was for Citigroup. That was a $500+ stock. And it fell to like gosh, it fell to like, I think like $10 or something like that. Like I can't remember exactly where the lows were, but it was low for Citigroup. Awful in regards to that, right? Look at a company like John Deere, that could be seen as like a construction play back in those days, right? That one peaked December 2007. So that was a really strange one. It peaked actually slightly after the market peaked, right? One of the most hidden stocks that no one ever pays attention to, but this one's crazy. You got to pay attention to this stock. It will actually tell you so much. You know what it is? Polaris, okay? This is a fascinating stock. This stock peaked 2.5 years before the SPY peaked, okay? This peaked in spring 2005. Now, Polaris is a fascinating stock to pay attention to. And the reason being, the products this company sells, they're the ultimate, the economy's doing great, I got too much money, I'm going to go spend some money type products, okay? They sell snowmobiles, ATVs, side-by-sides, fun stuff that people buy when they got way too much money, okay? And they don't know what to do with it. And so they're like, I'm going to go buy an ATV. I'm going to go buy a snowmobile. I'm going to go, like most of the people that buy Polaris products do not buy it for needs-based things. It's like, I want to go have some fun. I'm going to go get a big truck as well. I'm going to get a trailer. We're going to go out to the dunes. We're going to go do this, right? And I remember Polaris, we moved out of a very rough neighborhood into the middle class. We moved in 2001. And I remember being in that middle class neighborhood around 03, 04, 05, 06. A lot of people started to get these type of things, ATVs, side-by-sides, right? All this type of stuff. We had several neighbors in that middle class community that started getting this sort of stuff, right? And it actually correlates with the peak in that stock price, right? And then as the years ticked on and the economy started to get in trouble, guess what ended up happening? Polaris sales went down massively. Suddenly, by the time you got to 2009, the people that were buying those ATVs and the side-by-sides and snowmobiles and all that stuff, they were no longer buying those the same way in 2009 that they were in 2005. Things had changed dramatically, right? So it's one of the most hidden stocks that will tell you a lot, right? Now, the fascinating thing with this Polaris stock, right, is, and this might be a silly but a genius way to know if we're early or late stage cycle, because this is a big debate. Are we early stage or are we late stage? I hear countless arguments that the economy is late stage, right? We're getting ready for the crash in the economy, right? Economy is going to get way worse, right? I consistently hear that. This might be the silliest but most genius way to know if you're late stage or early stage in regards to the economy. Polaris peaked April 2021. If we think about a year where people were flush with cash and had way too much damn money, it was actually 2021. You had the stimulus money out there. People kept, for the most part, people, like especially in terms of professional industries, actually kept their jobs throughout that time. Unemployment spiked huge in that very initial wave of the Rona shutdowns and everything like that, but it dropped right back, very, very quickly as soon as like the tourism industry started to open back up and, everything started to open back up, right? And you had PPP loan money, you had all that stuff flushed out there at that particular time, right? And so, if anything, people were almost too flush with cash. The inflation hadn't hit people yet, right? And so 2021 was definitely a year marked with like big spending out there. Like, oh my gosh, everybody was getting ATVs and side-by-sides and all that sort of stuff at that particular time, right? And so that stock peaks in April 2021, right? And guess what? It actually bottomed last spring. In the spring 2025. And so you could make an argument that we have started a new economic cycle now at this point in time, where the economy for the average person is actually going to improve over the next several years and not get worse. And everybody makes this the point, again, I listen to these Wall Streeters on the reaction channel all the time. They always talk about late stage economy, late stage, right? We're later stage, we're late stage, right? There's an argument to be made that we could be early stage and we could have an economic cycle uptick for the next several years where the economy gets better, right? And we'll see if that happens. But if it does, just remember Polaris stock. Just remember that particular stock, okay? It's clear that one's in a definite uptrend there. So the moral of the story is here, risk on stocks can often peak 3 to 9 months before you get a correction or an overall crash in the market, right? It happens very often, and you can look back at the tech bubble days, you can look back at the great financial crisis, and you definitely see a trend of that happening, right? Don't bank on it, but it definitely happens a lot of times before, right? Now, for buyers of stocks, if you're an individual that's planning on buying stocks over the next year, okay, the worst case scenario for you is you're already getting lots of deals in the market. So let's say we don't get a correction in the market. Let's say we don't get a crash in the overall market. You're already getting huge discounts on a lot of stocks out there, okay? That's worst case scenario is already you're getting a lot of deals, right? Best case scenario is stocks get insanely dirt cheap over the next 6 to 12 months. Let's say these risk on assets, right, are setting up and giving you a hint of like, we got a major correction or a crash coming in the market. You get even cheaper prices over the next 6 to 12 months, right? Instead of getting 40 and 50 and 60 and 70% discounts on stocks, you might get 60, 70, 80, 90% discounts on stocks, right? Don't get your hopes up about that. But if you're a buyer over the next year, you're set up very well. You're already getting huge discounts. You might get even bigger discounts if these risk on assets are giving you a signal that we're actually going lower in the overall market and these assets are going lower over the next 6 months or so, right? That brings me to Bitcoin. Bitcoin has not been through the tech bubble. Bitcoin has not been through the great financial crisis. It hasn't been through major kind of down spells. It went through Rona, right? It went through 2022 drama, and both those situations, it got slapped hard. We all know that, right? But in regards to the Bitcoin cycle, here's the thing that's very interesting about this. According to the Bitcoin cycle, which a lot of people say this has been insanely accurate over its history, right? This baby's not bottoming anytime soon. According to the Bitcoin cycle, this baby's not bottoming until we get to around 30K, and that will be in the fourth quarter of this year. And a lot of people believe this Bitcoin cycle is insanely accurate throughout time. I wouldn't bank on it. Like, don't just say, oh, because the Bitcoin cycle says we're going to 30K and it's not going to bottom to the fourth quarter. Like, it's for sure happening. Like, you never know. Like, it could be wrong, right? But I've been actually tracking this recently, and I'm like, dang, it's actually been pretty impressive in regards to kind of calling this downward move and some of the spikes recently, and thinking like, oh, Bitcoin's coming back just to be let down again, right? So if that happens, you could make a strong argument that the overall market is also probably going lower and bottoming in the fourth quarter of this year, right? So just something to kind of keep in mind there. Now, I got to give everybody a huge warning. Do not, I repeat, do not let 2026 buying opportunities pass you right by, like people did in April of last year with incredible discounts on stocks all over the place, like people did in 2022. 2022 was a generational buying opportunity in countless tech stocks. Tesla fell to $100. Palantir was trading at $6. Meta was trading at $88. Netflix was trading at a fraction of the price it's trading at right now. Shopify was trading at $25. It was insane. It was a generational buying opportunity for countless tech stocks, right? Like so many of these companies, it won't be till their business models are irrelevant anymore and they lose their total management teams that are there and that they'll ever even see those prices again, okay? Generational buying opportunity. Past so many people buy. People were getting devastated in the market. They said, screw this, stocks are a scam. They left the market and they missed generational buying opportunities in so many tech stocks out there, right? 2020, huge buying opportunity, a scary one because obviously they're talking about the economy could be closed for, years, but generational buying opportunity in regards to the market itself. 2018 was it was a beautiful buying opportunity at the end of 2018. 2009, I wish I had a lot more money back in 2009. The problem was I was just getting started in the market. I got started in the market at the very end of 08, going into 09. Dude, you know how much I was making back then? I was making like $8.25 an hour. Oh, if only I had a lot more money. If only I had a lot more money back then, right? But of course, I'd be a lot older gentleman than 36 years old if I had a lot more money back then, right? But the moral of the story is do not let this opportunity pass you. The discounts you're getting now, and if we get even bigger discounts, don't let it pass you, because this is what happens time and time again. People say this time's different, the market's never coming back, blah, 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 right? And they let all these stocks go, pass them right by, all to a year later, a few years later, look back and be like, how did I not buy that stock down 70%, and that stock down 60%, and that stock down 80%, and that happens again and again and again. Never fails, right? Don't let it pass you by. Alrighty, next up here, AMD. What's going on here with AMD? My thoughts on this crash, what my plans are with the stock. Then we're going to Google McDougal, Elf on a Shelf, and my entire buys watch list, okay? Listen, AMD just got some great news. Do you know what the news was? Google McDougal is going to absolutely spend like a drunken sailor. They're talking about doubling their CapEx. I mean, just ridiculous numbers in regards to Google. They're so far ahead of what anybody was anticipating them spending for CapEx. It's a holy smokers, this ain't no joke situation, right? They're talking, and keep in mind, this number, they were talking about like $180 billion of spend. In 2026 was, I think Wall Street was at like 120, which was a huge number. They're talking about 180. Get me flipping my flapjacks, right? This comes right after last week. Meta said they're going to spend between 115 to 135 billion in 2026, right? Which was an insane number to hear. And now Google just said, oh, that's it. 125 midpoint. We're going to spend like 180 billion. Okay, that's insane. Now, guess what? One of my other companies, Amazon, company I'm up 143,000 on. This company, big investment for me. It matters tomorrow. $362,000 investment of mine. Guess what? Amazon's going to say they're going to spend crazy on CapEx as well. So you got just company after company just putting up crazy CapEx numbers. And guess what? That's very bullish for AMD, right? I posted this inside the private stock group. I said, CapEx $180 billion, billion, almost fell off the couch. It was true. Oh my gosh, when I saw that number, I was like, what? 180 billion, right? But the bottom line is this is very bullish for NVIDIA, very bullish for AMD, and very bullish for Broadcom, right? So we have a scenario here where AMD reports great numbers. They beat analyst expectations. They beat in terms of the guidance. Lisa Su said all the positive things you could have possibly said when she went on CNBC here today. The conference call was great. But guess what? The stock still went down. It's insane, right? Absolutely insane. Now, keep this in mind. This is very important, okay? Given Google's absolutely ridiculous CapEx spend for 26 that's expected, Meta, Amazon's going to put a crazy number up as well, right? These companies honestly have no choice but to moderate spending massively in 2027. No choice. The spending is so out of control, the increase is so out of control, they're going to have no choice but to moderate, okay? And so, it's just starting to take so much of their revenue and profits now at this point in time. It's just like everything's just basically going to CapEx, right? So they're going to have no choice but to moderate the spend. When I say moderate the spend, that does not mean necessarily pull it down. That doesn't mean like Meta spends 130 billion this year and they all of a sudden say in 2027 we're only going to spend 80 billion or something like that. That could happen, but that's a lower probability. It's just more like if they do have any increase, it's a very small increase then at that point in time, right? Now, if the market grinds down the next 9 months, that's going to give even more like the market will basically force Google, Meta, all these companies to moderate spending in a pretty substantial way, right? Now, the reason that's important is that's actually great news for AMD. And the reason being is AMD is the value play next to NVIDIA, right? And I told you guys this, I've explained this since last year regarding AMD and NVIDIA, right? I've explained this time and time again. It's very important everybody understands this. Listen, NVIDIA is AMD's best friend. AMD is NVIDIA's worst nightmare, okay? There's a big difference here, okay? And so you look at like the OpenAI and AMD deal, right? This is fascinating because AMD's margins are going up right now and they're going to continue to go up for the next several years. And the reason being is NVIDIA went so crazy with the pricing on their chips that AMD is able to command margins that they've never seen basically ever, right? Meanwhile, AMD is going to force NVIDIA to likely bring their margins down because if AMD is undercutting price, right, and start stealing away a lot of market share, NVIDIA then has no choice but to do what? Cut prices. Here's the issue. If NVIDIA cuts prices, right, their margins are going down to Chinatown. Additionally, this is even a bigger issue, that would then be NVIDIA admitting that AMD is right there with them. And NVIDIA's had this kind of like thought over the last several years of like, there's no competition for NVIDIA. It's them by themselves. If suddenly you have to start cutting price because AMD's putting the pressure on, your margins start going down, then everybody realizes you're nothing special. You're more commodity, right? That's a hard thing to admit. That's a hard thing to admit, because that could totally that could hit your stock price hard. That could hit the morale of your company hard. Ooh boy, your margins start going down and people start looking at you as more just commodity play. Whew, that's tough, right? That's very, very tough. Now, the other issue is NVIDIA is investing, it's supposed to invest in OpenAI. Now they're trying to like pull back from that whole thing, and they're like, well, they invited us to invest, but that doesn't mean we're going to for sure. We're considering it, right? But NVIDIA is supposed to supposedly invest in OpenAI. Meanwhile, OpenAI is investing in the AMD. Right? They're supposed to buy a massive quantity of AMD chips over the next several years. And if OpenAI comes through with all their purchases, they could acquire up to 10% of AMD. That doesn't make you, that cannot make you feel good if you're NVIDIA, right? Like, oh, we're going to potentially invest into you so you can buy a bunch of AMD chips and then get a bunch of ownership of AMD. I don't think NVIDIA would be it would be that happy about it, right? So this is a whole fascinating situation in regards to this, right? Now, additionally, I think this really matters significantly, because this kind of came out on the DL, right? But there's been recent reports that suggest tension between OpenAI and NVIDIA, primarily driven by dissatisfaction over the performance of some of NVIDIA's hardware for specific tasks. People assume, oh, NVIDIA got these super high-end chips, so they're just great for everything, right? Not necessarily. If you look at some custom chips, they could be much better for certain tasks than actually what NVIDIA does, right? Performance concerns. Sources indicate that OpenAI is not satisfied with the speed of certain NVIDIA chips regarding AI inference. The process of answering user queries, particularly for software development tasks, okay? And basically not giving, I've also heard like something about like not giving answers like quick enough, right? And guess what Lisa Su's been talking about the last year, if not last 2 years? She's been talking about how AMD is very well positioned for inference, right? Whereas NVIDIA really got out there in terms of training these models in a huge way and just totally won that market, right? But she's been talking about inference is going to be orders of magnitude bigger than training was, and that AMD is very well positioned for inference, right? It's all lining up, baby. It's all lining up. So as far as me and what I'm doing with my AMD stock, listen, I'm holding every share as tight as I possibly can, right? I'm a very happy shareholder. I spoke about AMD in this video here from 22 hours ago. 104,000 people have gotten to see it so far. It's called AMD Own It. In that video, I also gave my projections for AMD stock over the next several years, okay? So if you're at all interested in AMD, make sure you check out that video when this one's over here today, okay? Alrighty, next up here, Google McDougal. My plan with that stock, then we'll get an elf on a shelf, and then we'll get into my possible buys watch list, every single stock, okay? Google, listen, they all wanted this stock to go up. When I say they, I'm talking Wall Streeters. They bought this stock relentlessly the last 6 months. They wanted this one to print so bad, so bad. This was the one big tech that they really wanted to go up. The Mag 7, they really wanted to go up. But the insane CapEx Google just came in with is screwed up everything, right? I mean, the number is just so ridiculous that it's just like they tried so hard to get this stock up in aftermarket. But I mean, that CapEx number is just so huge, it scares a lot of people away, okay? No, let's be quite honest. This is a grade A income statement. It's a banger from Google McDougal, as you would expect. Revenue, 18% growth year over year, almost $114 billion of revenue from $96 billion. Cost of revenues only went up 13% versus 18% revenues. Winner, winner, chicken dinner. The issue, look at R&D. R&D is rising rapidly for the company. 42% growth. Keep in mind, that's coming off of a low base. That base is starting to get big. So imagine 42% again next year on a now an $18.5 billion number. All of a sudden, R&D starts to hit you hard, right? When you're having these sorts of increases and the base keeps getting bigger. It's fine when the base is really small, but as that base gets bigger and bigger and bigger, Ooh, boy. And we'll talk about why that's going so insane in just a moment. Sales and marketing was only up 12%. That's not bad. G&A, general administrative, that one was a trouble spot. That was up 21%. So total costs and expenses, this was kind of a trouble spot. It was up 19% year over year. So income from operations was up very nicely year over year, right, to $35.9 billion from $30.9 billion. But that was up 16%. That's the only reason I didn't give them an A plus here, and I gave them a grade A, because income from operations rose at a slower clip than revenue rose, okay? Now, other income, that was up 150% year over year. Income before income tax is up 21%. Net income up 30%. Diluted EPS up 31%. So banger earnings for Google, as you would expect. That's the reason it's like a $4 trillion market cap or whatever it is. 3-4 trillion is a big number, right? Balance sheet's a beast on this company. Look at cash and cash equivalents, $30 billion plus versus $23 billion the same quarter last year. Marketable securities, $96 billion versus $72 billion. Total cash, marketable securities, and cash equivalents, $126, almost $127 billion versus $95 billion, right? Long-term debt has peaked up a bit, so that is something to keep in mind. Long-term debt went from $10.8 billion to $46.5. This is an issue here. You look at a company like Google, okay? They're talking about spending $180 billion on CapEx in 26, okay? And by the way, shareholder equity up to 415. So the balance sheet's still amazing at Google, okay? Listen, for as long as I can remember, basically since I've been in the market back in like 08, 09, Google's always had one of the best balance sheets in the world. Here's the issue. They want to spend $180 billion on CapEx this year, right? Probably another crazy number next year. Some of that you can fund out of profits, right? But you might start taking on a lot of debt. Imagine Google 3 years from now with a huge debt load on this company. Imagine them with hundreds of billions of dollars of long-term debt. Then we can't call Google a great balance sheet anymore. And that's the issue with these companies spending so insane and taking these business models from being asset light to asset heavy. Look at, they just went from $10 billion of long-term debt to now, $40 billion plus? And now they're going to really start spending like a drunken sailor? You could be looking at Google a few years from now with hundreds of billions of dollars of long-term debt. Now, is that a death knell for the company? No, because they still make crazy profits. Their revenue's great. It's not like, you're going to zero because they've got hundreds of billions of dollars of debt. They can handle it, but it makes you start to look at the company different. You start looking at the company as like, they're one of those companies again. One of those huge debt-laden, massive debt companies, right? That's where things could go with Google. And I'm going to be honest, that's where things are probably going with Google. You're going to look at this company a few years from now and you're going to look at that balance sheet and you'll see hundreds of billions of dollars of long-term debt. And this was always a company that the debt was never even like a subject. It was basically like they had non-existent debt, right? Or you even look at this company, at this time last year, $10 billion, literally nothing. All of a sudden, this company has $300 billion of long-term debt. That's a different story, right? Different story in regards to that, right? Now, the issue, the big dog issue, okay, they're spending so insane. This is going to start to hit earnings hard. There's going to be hell to pay. All this CapEx spending, it's going to come right back. There's going to be hell to pay here in 2027, 2028, 2029, okay? They're spending such an insane amount. This is going to start hitting that R&D line item huge. You already see it going crazy, 42%. Now, you might think, they're spending, that's where, they're spending on humans, right? Nope. A lot of that has to do with the depreciation because you're buying all these chips, right? Now, these companies, it's also debatable subject on how long they're taking depreciation cycles for. So according to nvidia, they're talking about their chips, in terms of real usable life. They're talking about you got to be on the next cycle immediately. That could be sales talk or that could be truth, right? But if you talk to nvidia, talk to Jensen, they basically say these chips are only really great for 2 years, right? And so maybe you should be taking two-year depreciation on this. But it looks like these big tech companies are going to try to take 5-6 year depreciation. But that also means you're going to have to take hits for the next 5 to 6 years on all this, right? So when you see a company go spend $180 billion in 1 year, understand that's going to hit that R&D line item huge for the next 5 to 6 years. So you're talking about, $30 billion, if not 40, 50 billion, depending upon your schedule, per year of an R&D hit there, right? That starts to stack. You do $180 billion of spend in 26, right? You just had a crazy spend last year in 25 as well. That starts to really hit this year, right? Then you got $180 billion in spend this year. That starts to hit hard next year. Then the next year, let's say you do $200 billion of spend. Dude, there's hell to pay. That R&D item goes crazy and your earnings look way less. And so that's the issue, right? That's the issue you run into with companies like Google and even my beloved Meta is you got these companies, they were some of the most attractive stocks you could ever invest in because they were asset light, they made stupid profits, and they had great balance sheets. Over this next few years, we're going to be talking about companies that are not going to be asset light anymore. They're going asset heavy. Asset heavy is not as attractive. Stupid profits? I don't know about that. With the way this depreciation is going to start hitting hard, I don't know about stupid profits. And then, last point. Balance sheet. Balance sheet is not going to be looking good for these companies. It's going to go from a situation where these companies had the best balance sheets you ever seen to all of a sudden these companies over the next few years could start stacking massive amounts of debt on the balance sheet, right? While depleting cash. So what are my plans with Google stock? It's been a great stock for me, $78,000 in profits, and that was just off one buy. On April 23rd, 2025, I bought 444 shares in the public count, right? It's made me great money, 112%. Listen, I'm going to probably take my money and run. Not because Google's a bad company, not because they're getting disrupted by OpenAI, none of that stuff. Great company, they're going to continue to make great revenues over the future years. But I've already got two companies spending like drunken sailors. One's Meta, and Amazon's going to be spending like a drunken sailor as well. I don't know if I really want to hold a third company that is just absolutely out of control with their spending, right? And so I might take my profits out of Google and invest that elsewhere. I might go ahead and do it, right? Now, the other issue with Google is if you look at my base case, this is my old base case. I've got to update this. I had them doing 14% net income growth on average per year, 2026 to 2029. Based upon how insane that CapEx is going, I don't think they're going to do it. Even with, in my base case, I have them growing revenues 12% on average per year, 26 to 29. I'll be honest with you guys, I don't think they're going to be able to do it. So that net income is likely not going up as high as I think it's going. I had them doing net income of $220 billion in 2029. With how hard that CapEx is going to hit depreciation, which is going to hit that R&D line item, I don't think they're going to do it, man. I don't think they're going to do it. And keep in mind, even with that scenario, this was only going to give me a CAGR of 7% to 12%. So like Google, when I was buying it, was a steal deal. It was set up for great compounding annual growth, right? Now, it doesn't really set up well at all. So I might take my profit and run out of Google. I'm asleep on it, but I might take it. Elf earnings. What's my plan with that stock? Then we'll get into my full buys watch list. So Elf on a shelf, it's up 5% after hours. And I was joked in the private group. I said they probably missed numbers, right? Because all these companies that are beating earnings, their stocks are going down. So I'm like, Elf, they probably missed, right? Guess what? They didn't miss. Their numbers were a banger. As far as non-GAAP EPS, $1.24, that beat by 52 cents. Revenue came in 38% up year over year. That beat by $27 million. Additionally, they took up their expectations for net sales for the year. They were at $1.55 billion to $1.57 billion. Now they're at over $1.6 billion expected for this fiscal year. Adjusted EBITDA, they took that up by over $20 million or around $20 million as well. Adjusted net income, they were at $165 to $168. Now they're at $180 mil to $183 mil. And adjusted diluted EPS, they were at $280 to $285. Now they're at $305 to $310, right? Great. As far as the income statement goes, this was a grade A, almost an A+, like a Google situation was so close. Almost an A+. I gave them an A grade. Net sales up 38% year over year. That's a banger, right? Obviously, a lot of that is definitely attributable to Rode in that acquisition. Cost of sales was up 39%, so a little bit of a high number there, and that's why I didn't give them an A+, right? Cost of sales rose just slightly more. However, obviously, your revenue is way more than your cost of sales, so your gross profit's still going to explode higher, even if your cost of sales is up 1% higher, right? So gross profit up 37% to 347 mil from 253 in the same quarter last year. And keep in mind, this is even with the whole tariff situation, all that, right? SG&A not only rose 28% year over year, which I'll take. If you can tell me my net sales up 38% and SG&A is up 28%, we're going to take that every single time. Winner, winner, chicken dinner. Operating income rose 93% year over year for the company to $67 million. So they're really starting to get some leverage on profitability. Net income was up 128% to $39 million from $17 million. Diluted EPS up 116% to 65 cents from 30 cents. That's a grade A banger out of ELF. Almost an A+, right? Here's the deal with ELF. It's on its way back to 200 plus. It's not going to happen overnight, but it's on its way to 200 plus. Everything I see in the business is going in the right way. Revenue's going up very nicely, obviously. I expect that to continue, not at a 38% clip forever, obviously, but they have a lot of room to raise those revenues. International expansion is massive. They still have so much expansion just with Rode in the United States, never mind talking about international. They're starting to get some real leverage in regards to the bottom line. The tariff situation is what it is. That's already in the past. It's on its way to 200 plus again. ELF is a stock I'm up over 1,000% on in the public account. This is a major position for me in other portfolios as well. The reason I don't buy more shares of ELF in the public account is because I already own a lot of shares in other portfolios as well. So do keep that in mind. This is actually a smaller position for me compared to some of my other portfolios. So do keep that in mind, okay? Last up here, let's get into my possible buys watch list here and talk a little bit about these stocks. So possible buys watch list, we got Fubo right up there, $1.62. I mean, just give it to me for free. I mean, at this point in time, right? Meta is still on my possible buys watch list. The CapEx, man, the dang CapEx. Amazon as well. AWS growth, obviously everybody's expecting Amazon to come in with a crazy CapEx given Google. So Amazon sets up really well, man. Everybody's kind of expecting Amazon not to do well because Meta's giving back all its gains. Google, we'll see if that stock's down tomorrow, but the CapEx was crazy. So now people are expecting, if anything, Meta's going to go down, right? Also, Azure growth was not like a surprise to the upside. So AWS expectations are a little bit lower now. So if AWS comes through with a banger quarter, and let's say CapEx is, up substantially year over year, but it's not like a crazy number like Google, you could see Amazon pop to 250 plus, but we'll see. I'm not even going to get my hopes up, especially with the way these stocks are going down right now, right? They're all in Chinatown. PayPal down to 41. Celsius 49. Looking forward to Celsius earnings. Honest is a $2 chuck. ServiceNow is a great buy in my personal opinion. People have gotten way too crazy about these software stocks. Salesforce 199. Give it to me. RH is actually interesting to me. I want it lower though. Elf Beauty's still a buy. Even tomorrow, even if the stock's up big tomorrow, it's a buy. If the stock's down, it's a buy. EL stock, definitely keep an eye on that one. They report earnings tomorrow after the bell. It's definitely one keeping an eye on. I have a lot of shares in the stock, but at much lower prices. American Express, always a buy. I don't know other way to put it. Kind of like Amazon's always a buy, American Express always a buy. Bath & Body Works, this is an interesting one to me. I just don't love the balance sheet there. That's probably what's kept me out of it. Whirlpool, we'll see. That one's on my possible buys watch list, but I think it's still pretty low probability I'll buy that one. Cheesecake Factory, always a buy. Adobe's a great buy right now. I was looking at that one in that 58-minute video I recorded you guys that never got to get released because Loom wouldn't let me download it. But Adobe, I was talking about that one in that 58-minute video. 4P's like 11 on Adobe. Adobe is going to be so hard to push down on red days now. It's going to be possible, but it's going to be hard. Meanwhile, on green days, it's going to, explode to the upside. Nike up 5% plus today. Nike's still a steal deal. That's $64. Come on. And Cavistock, I'm keeping an eye on that one. It might crash on earnings. If it does, I might step in after that. I'm kind of looking for that one in the 40s, but we'll see what happens there, right? Remember, we're playing this game for the next 3 to 5 years in regards to your stocks. Always keep focused on where your stocks are headed over the next 3 to 5 years specifically. Not the next 3 to 5 days, 3 to 5 weeks, 3 to 5 months. That comes and goes. what happens with your company's earnings power and potential over the next several years. That's what matters. Okay, so stay focused on the long term. I appreciate y'all for joining me for this 44-minute beast here today. If you want to apply German private stock, you want to take your investing game up to a much higher level than where you're at, that will be the pinned comment down there. Click on that, and let's see if we can get you in there and access to everything. All my course curriculums. This is a time to learn, man. You got to be learning during this particular time. Access to 1000xstocks.com to do your research. Access to see the moves I'm making each week, exclusive weekly videos from me, be part of the Discord chat with the great community with not only myself, but the 6, 7, and 8 figure members that will be pinned comment down there. Much love and have a great day.